Hello, good morning and welcome to ET Now's the newspaper show with me, Varun Hiremat. For the next half an hour, we'll be walking you through the headlines, major ones from both the Economic Times as well as the Times of India. Before we do that, let me say it's needless to let you know at this point that the newspapers are completely safe. Please go to wantmypaper.com where you can look out for delivery options to your residence. I repeat again, wantmypaper.com if you are interested in getting a newspaper delivered to your residence. With that being said, let's now get a move on with the individual stories for this morning, and we have a lot lined up, and we are going to be bifurcating them as well for you later, but let's first just begin with the top 10, and that begins with the fact that 15 new names in the list of 47 banned Chinese apps. The panel to draw a roadmap for making India a manufacturing hub. Jagadishan to succeed Puri at HDFC Bank. Airtel, Amazon Web Services eye a pact. Amazon, Flipkart pad up for sale. Vivo pulls out of IPL title sponsorship. Premature to predict demand, says Coca Cola. Diageo writes down 12,720 crore on COVID blow. Worst is over for economy, says the Finance Ministry report. And Ayodhya gets ready for Ram Temple Bhumi Pujan. So like I said, those were the top 10. Let's now get you the bifurcated version, corporate versus markets. So the corporate stories begin with the fact that IT firms look to hire 1 lakh plus employees this year. Quite a contradictory move to the cut we just saw. Oyo restoring staff salary after pay cuts. Most of Vodafone-Idea's dues for April and June have been paid. Sun Pharma launches Faviparivar. And NIIF won't fund the Delhi-Mumbai Expressway. Let's now get you some flavor from the market. RIL and finance stocks lead the index rebound that we saw yesterday. Axis Bank launches a 10,000 crore QIP, and that's an ET Now news break. Hero Motor likely to maintain momentum. Robust farm outlook spurs rally in fertilizer stocks. And gold hits $2,000 an ounce for the first time. Okay. So, those were our individual headliners that we wanted to bring to your attention. We also now are going to get a move on with the stories, and the first one is revolving around online sales during the festive season. And according to ET, India's top online marketplaces, Amazon and Walmart-owned Flipkart, are launching promotional events beginning August 6th aimed at helping sellers liquidate old inventory and free up working capital ahead of the mega festival sales. Amazon's 2-day sale will be its first large promotional event since the easing of the lockdown, and Flipkart's 4-day event will focus on electronic appliances and fashion. For both e-commerce majors, hosting the sale this week has become a matter of urgency. The moratorium on working capital loans for sellers granted by the government is due to expire on August 31st. So we've been bringing this to your attention. We've been flagging off that Amazon is going to be launching 300 new products on the 6th and 7th of August and do a huge online sale. Part of this is obviously to liquidate old stock which is still lying around. So you might just get some very good deals in the next coming days, especially this weekend. So make sure you log on to these platforms and take a look at what they have up for offer. Okay. So that was what we had to tell you about the sale that you should look at this weekend. We're now going to look at another story, but Vinny is going to walk us through this. I'll just give you a little background. It's on page 1 of the Economic Times, and it's about Airtel and Amazon possibly tying up for cloud services. So it seems that Bharti is set to sign a strategic alliance with Amazon, AWS this is, to tap small and medium businesses. So this will make them a little more competitive against Jio, hopefully. But Vinny, good morning. Could you walk us through the finer details? How large is their transaction, if any at all? And what Bharti will gain from this?
So Varun, like you rightly said that, they are signing, they're set to sign a deal with Amazon Web Services, and this will obviously give them an edge to compete with Reliance Jio. And you know how the Reliance platform is actually growing. Now, this is a very large market if you go to see, and by 2023, the public cloud market in India is likely to be around $8 billion mark. So it is to reach that mark. So they do have a large opportunity over here, and this does give Airtel an edge also to partner with the partnership with Amazon. They could offer more services to the clients. This is surely a very positive sign for Airtel coming in such a time, when Jio is actually leading the market everywhere you see. So surely a positive sign, and this will help them tap the small as well as medium businesses. So we'll surely watch out for this deal, and we'll have to actually wait for further details about when will this deal be there. This is as of now only reports, and we'll have to see further details of this as well. So let's see how this actually works out for Airtel.
Okay, thank you for that, Vinny. It really seems like Airtel had missed out on the partnership bus, and this might be the beginning for them, especially considering they're looking at a tie-up with Amazon, which is yet to enter the Jio investors list in a concrete way. Despite all the rumors we've been hearing, there's still to be a concrete check from Amazon into Jio, which has not come. So it looks like they might just be pairing up with Airtel going forward. Let's now switch gears. We have page 6 of the Economic Times, and a panel on the manufacturing push is to meet today. The committee is expected to draw up a blueprint for making India the manufacturing hub for a dozen identified sectors, including electronics, auto components, furniture, and footwear. The meeting will also shortlist another 8 sectors that have similar potential proposals, and proposals have already been submitted on the ways to reduce import dependence from these sectors, and specifically from countries like China. So that's just part of the Atmanirbhar push that we've been really championing at ET now. Page 6 of the Economic Times. Do have a read if you're interested. We're now going to go over to page 6 of the Economic Times, and there's a lot of information here, but I'm going to let Pankaj walk us through the details. It's basically talking about Maruti's H2 expectations and how they might just stack up to what we saw last year. But Pankaj, good morning. Great to have you on the show as always. What are they saying about Maruti? Okay.
Why this article has been written, and broadly pointing out towards
Okay, we seem to be having some technical difficulties this morning. So Maruti Suzuki is expecting sales in the second half of FY21 to match those in the previous year period. This is before the market gets back to a phase of growth in FY22. So what it's saying is that this message, by the way, has come from R.C. Bhargava, who's the chairman in Maruti. And in the company's annual report and message to shareholders, he says that the company's sales and service organizations have become fully operational as of recently, and that the demand for the products has also recovered well. So they've already maintained their leadership position, and they've sold more than 100,000 vehicles in July, which seems to be outperforming their peers. So what he'd like to say is that H2 of this year will see a pickup and match H2 of last year at the very least, and he's fairly confident that growth will resume from the next financial year onwards. There's a lot more in there that Pankaj could have walked you through. Unfortunately, he's not with us this morning. So if you are interested, do have a look, page 6 of this morning's Economic Times. Okay, we're now again going to stick with page 1 of the Economic Times, but it's revolving around Diageo's global sales. And according to the Economic Times, the world's largest spirit maker, Diageo PLC, has written down 1.3 billion euros globally on account of coronavirus-led disruptions. So basically, if they were a bank, they'd make provisions. They're taking their own provisions. India has accounted for half of the impairment charges. So that's huge. That means 650 million euros of the 1.3 billion euros came from us alone. The non-cash write-down reflects the impact of COVID-19 and the challenging trading conditions in markets such as India, Nigeria, Ethiopia, and Korea. So that's what kind of happened with Diageo over the weekend. Let's now switch stories yet again. This one is on page 2 of the Economic Times. And nearly 15 new mobile applications such as ByteDance, owned video editing app CapCut, and Xiaomi's browser app have been included in a follow-up ban on 47 Chinese apps late last month. According to the list that ET has reviewed, the remaining were light or pro versions of the apps that the government banned earlier in June, including TikTok and Hello. Among the new apps included in the list are photo editor Airbrush, short video and prediction tool MiPi, and camera app Boxcam, as well as many popular selfie apps. 275 Chinese apps are still under scrutiny for any violation of national security and user privacy. Okay. We now have Poonam, who's going to be joining us, and it's on the Times of India. There's a story regarding startups having to wait longer to own their own non-banking financial companies. So good morning, Poonam. Welcome to the show. Could you explain to us in detail, please, what exactly this article and story means?
Yes, good morning, Varun. In fact, yes, Indian startups will now have to wait longer to own their NBFC license since the RBI has returned some of the applications, some of the which have in fact been funded. The applications include Secure-backed BharatPay, Google Capital-backed Deco, and digital banking startup Jupiter, backed by Secure and Matrix Partners. Three sources aware of the matter said to Times of India. The move is following, in fact, the recent geopolitical developments that have spurred tighter scrutiny of Chinese capital coming into the local startups via tax havens like Mauritius, where most of these venture capital and private equity funds are registered. In fact, secondly, money coming from funds registered in Mauritius, which is on the Financial Action Task Force grey list, is also being looked at with scrutiny because this capital is from a jurisdiction where weaker norms are there in order for money laundering, and this has in fact resulted in the RBI returning these applications. India has been making also multiple moves to boycott Chinese influence post the recent Ladakh border conflict in May, and as such, we are also seeing across the board that regulators across the board have been taking stringent scrutiny of the capital coming in from China. Related borders or disguised via China. So yes, I guess it is going to be slightly difficult times ahead on this matter. We will really have to see how things shape up regarding the India-Chinese trade, etc., and the developments on this matter. But as of now, some amount of difficulty for the Indian startups to raise money via some of these routes are coming under RBI scrutiny.
Okay, thanks for that, Poonam. Always great to have you with us. And what's quite an interesting story now, we're going to switch gears a little bit. Chinese smartphone manufacturer Vivo has opted out of the Indian Premier League 2020 title sponsorship after a disagreement with India's cricket board over a discount on the sponsorship fee. The exit is also in response to growing opposition to a Chinese brand backing the tournament following the Galwan standoff. According to ET sources, Vivo had been looking for a reduction in the sponsorship sum due to the COVID-19 disruption and had decided to sit this one out as anti-China sentiment intensified over the past 2 years. The move came less than 48 hours after the IPL Governing Council announced on Sunday night that all the sponsors of the league would be retained. Officials said Vivo executives had been trying to get some clarity on IPL since June, but BCCI did not pay any attention. So this is quite a big blow to the IPL. Vivo has been a huge sponsor and now they seem to be backing off. Do have a read if you're interested. We'll take a look. Okay. Vivek's now going to walk us through what's happening with the India National Highways Building Authority, and they've decided to go ahead one of the flagship projects that was going to connect Delhi and Mumbai via an expressway. So good morning, Vivek. Welcome to the show. Could you please walk us through the finer details of this?
Well, good morning. So what actually happened is that we're talking about the Delhi-Mumbai E-way, and this was something that was launched and with quite a bit of fanfare and a lot of hope in terms of a quick turnaround, and also given the fact that it was amongst the few times that the NHAI as well as the NIIF, which is the National Investment and Infrastructure Fund, were joining hands. So what was supposed to happen was that both the NHAI, the Roads Authority, and NIIF were to come together to set up a special purpose vehicle, or an SPV as they are known as, to go ahead and build in a joint manner the Delhi-Mumbai E-way. However, what the Economic Times is reporting today is that the NHAI has decided to go ahead and build this particular project without the assistance from the NIIF. This is simply because they believe that NIIF was not willing to share risk in the proposed SPV, and they offered barely 2,000 to 3,000 crore as equity as per NHAI officials, is what the ET is reporting. So now what they're going to do is that the NHAI said that they have decided to invest equity on their own, and they believe that if they act on their own, the turnaround times could be quite quicker. So overall, it looks as though the Delhi-Mumbai Highway E-way will now go ahead, but without any participation from the NIIF.
Okay, thanks for that, Vivek. Great to have you with us as always and walk us through the finer details of that story. Okay, let's now cut across to Chandra. Good morning, Chandra. Welcome to the show. It was just a couple weeks ago, I think, or maybe last week, that we were talking during the newspaper show, and the subject we were actually discussing is how IT firms have been the first or one of the largest layoffs that we've seen in recent times, right? I believe they're all in the thousands of employees we've seen cut. I know LinkedIn recently laid off 1,000 employees or informed them that they were going to be laid off. Now we're hearing that IT firms are going to hire more than 100,000 people locally, and it's only been a week. So how has the stance changed so quickly? Is it a different set of companies or the same set of bulge bracket IT we're looking at? Where is this hiring going to happen, and how come the stance has suddenly changed?
So they're talking about the pipeline, Varun, in terms of the deep pipeline that they are seeing. They are optimistic that the hiring is going to come back. And the kind of firms we are talking about here are the global, are the Indian IT companies. So, for example, India's largest IT services firm, TCS, is talking about hiring 40,000 new executives, much like last year, according to the global head of HR, Milind Lakkad. Infosys will onboard over 20,000 people, while HCL Tech will take in 15,000 freshers. And Cognizant, which has actually seen a lot of firing and sacking, itself is planning to hire 15,000 freshers. So it looks like the quarter after COVID is an aberration, and with the demand coming back, IT companies also now want to step up hiring. So what experts say is there's a lot of pent-up demand as companies haven't been hiring over the last 3 months. They've been waiting for new deals, and now they're creating a bench
in anticipation of some of these new deals. That's what's happening on the IT front, but it's certainly a positive sign because IT to a large extent is the largest hirer. If you look at the private sector, it also leads to good consumption. So overall, it's a positive trend.
Okay, positive trend, says Chandra, so thank you for that. Let's now switch gears, page 1 of the Economic Times. In an interview with ET, SBI Chairman Rajneesh Kumar said that the government and corporates have to open up their wallets to invest. The action should go hand in hand for a quick economic recovery, since the vital middle class remains cautious amid ongoing unlocking of the economy. He also said that an across-the-board moratorium is not what is needed at this moment. So there's uncertainty across banks, non-banks and MFIs. 6 months moratorium was good enough to take care of the temporary cash flow disruptions. We don't need an across-the-board moratorium. Now what we are saying is that the future course of action should be left to the bank and borrower. So that's the message from none other than Rajneesh Kumar. We're now nearing the end of this morning's segment. Times of India top 5 as we wind down. PM to lay first Ram Temple brick today. New COVID cases were the world's highest on Monday. Mumbai's second heaviest August downpour in 10 years. 50 dead and 2,700 injured in twin blasts in Beirut, and our prayers go out to everyone in Beirut. RBI blocks NBFC plan of top-funded startups. So that was the headlines from the Times of India. And just so you know, before we kind of come to the end, Ayodhya is getting ready for the Ram Temple Bhumi Pujan today. So we just wanted to again bring that to your attention. It's going to be quite a key development for us going forward.